Understandably, we're getting lots of questions from clients about their media investment over the short and long term. I'm going to talk about 4 areas: impact on media pricing, media owner flexibility, value opportunities, and the outlook for the second half of the year. First, the impact on media pricing. With many advertisers impacted by a lack of consumers and/or supply chain issues, a significant amount of spend for the next 2 to 3 months has been deferred or cancelled. While out of home and cinema have been severely impacted, every channel has been affected. In China, we saw this across February, March and April. In Europe, we see a similar impact tracking about a month later. With populations under lockdown, media consumption across linear TV, streaming services and digital has grown significantly. Weekly viewing for linear TV, which in most countries have been tracking down single-digit year on year, has grown typically 20 to 40%. In China, even as lockdown measures are being eased, viewing is still up 20%. In a pure demand-supply marketplace like UK television, short-term reduced demand coupled with an increased supply translates significant deflation of over 30%. Even in markets where unit pricing for airtime is fixed, deflation is coming as a result of audience growth. The dynamics will be similar in radio and digital. Even Google and Facebook, who've always seemed impervious to market changes, are affected. Both the long-tail businesses where most of their advertising revenue comes from small businesses. Given the number of small businesses affected, their revenues will be down and pricing impacted accordingly. Just have a look at the current clearing prices on Facebook. At a time when some advertisers are withdrawing from the market, ironically, the value on offer is outstanding. Moving on to media owner flexibility. Understandably, some advertisers have needed to pause their activity. Our message to vendors is simple. We'll remember those vendors that have been sympathetic and collaborative at this time and prioritise them when things return to normal. Generally, vendors are behaving sympathetically, though deferments are being treated better than full cancellations. Our advice to clients remains, if you're uncertain about the shape of your activity over the rest of the year, then defer activity rather than cancelling it. In the US, we're not yet seeing the same extent of flexibility as elsewhere. Upfront pricing has typically overestimated audiences, and that requires vendors to compensate with ADUs, so audience deficiency units. Some vendors are allowing clients to cancel activity, but in return for writing off their ADU entitlement from earlier in the year. In a number of markets, vendors are waiving the usual advance booking conditions to allow advertisers to return to market over the next 2 to 3 months quickly and without price impact. So where do we see the value opportunities? With vendors undersold and swollen media consumption, active clients are already enjoying significant deflation. For those clients in position to invest more in the current market, new money is being rewarded above and beyond existing negotiated pricing. For example, in the UK, ITV are offering an additional 30% value on all new investment. With uncertainty about how quickly markets will recover, there are opportunities for those clients that are willing to commit for the remainder of the year and pay in advance to both improve their value and mitigate against potential pricing recovery. Finally, our outlook for the second half of the year. We don't know how long the lockdowns in place at the moment will remain in place, and after that, how quickly populations and businesses will return to normal. Despite the flexibility that media vendors are offering, advertisers may return tentatively. While the picture varies by market, our broad view is that we expect markets to start to stabilise over Q3, meaning pricing will recover to roughly 2019 levels. If the pace of recovery continues and deferred spend returns to channels where supply is fixed, we may well see some inflation return in Q4 this year. We need to plan smartly. If we see significant inflation in linear TV, then upweight online video as price premium versus linear TV is likely to narrow. Constant review and agility over the coming months will be critical. We're here to help you navigate the situation and address any questions or concerns you may have. Thank you.